Hello and welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. We are at PDAC in Toronto and we're here with Richard Pearce, CEO and Director of Southstar Battery Metals, to share his insights on critical minerals and the Santa Cruz Graphite project. Welcome, Richard.
Hi, Marilyn. Glad to be here.
Yes, good to have you. So let's start off with an overview of your company and bring us up to date on your priority projects right now.
Sure. So we're basically a production story. We've got Santa Cruz in Brazil in construction. We're on schedule, on budget. We should be producing at the end of this year. We're going into production basically in phases. So phase one will be 5,000 tons per year of graphite con. Phase two is 25,000 tons. Phase three is 50,000 tons. Over the next 4 to 5 years, we'll basically be investing about $80 million into those facilities and really looking to take advantage of the marvelous infrastructure that we have in place. We'll be on grid power, very low capital intensity, and first quartile of OPEX, so we'll be competitive throughout the ups and downs of the inevitable commodity cycles. In Santa Cruz, I think that's phase one, or kind of the first part of the story. Ultimately, what we're doing is putting two mines, each producing 50,000 tons of concentrate into production, and a centrally located value add plant somewhere in that southeast corridor of the U.S. So Bama Star is our second project. We basically will be putting out a resource statement any day now. We'll be back out drilling basically in May, looking to put in another 2,000, 3,000 meters of drilling, get to a PEA in Q1 of next year, and again, scale those operations. So we're at a time where I think supplies are constrained for a variety of reasons, from permitting, licensing, supply chain, equipment, people, etc. And the growth potential right now is exponential. So when you look at the demand going from about 1 million tons per year to 4 million tons in a decade, it's really hard to do. So I think Southstar is well positioned to be one of the first producers in strategic locations with scalable assets, and there couldn't be a better time. 5 years ago, nobody wanted to talk about graphite, and now battery metals and the energy transition really is a fantastic place to be, and in terms of timing, you just couldn't be better in bringing stuff online.
Right, and I want to talk about the sort of the landscape for battery metals in a minute, but I want to, it's so interesting, to see your company going into production now soon, and it's always, I find that interesting, an interesting conversation, because then we can talk about sort of the lessons learned in terms of like your journey in bringing your mine to production. So what have been some of the lessons learned, and can you talk about some of the insights and where you see the gaps have been in terms of being mine to production?
I think there's 2008 was a real wake-up call to the mining sector. Junior miners going out, exploring, putting out studies, selling to a major. That was the old, way of doing things, and I just don't think that is applicable anymore. And it's, at least for right now, I don't think it's a viable business, alternative. So when we look back, we got involved with Santa Cruz basically in 2010. It basically took us 13 years to go from concept and design through to go, no-go decisions by the board, and actually moving towards construction and production. So things take quite a lot of time and quite a lot of investment, and you kind of have to be committed to that. We're a group that is in it to produce and scale, so our goals aren't to trade paper, get to a particular study phase and then sell it. Our goals are to put this into production in Brazil, put this into production in Alabama. It'll be about $650 million revenue company, maybe a $1.5 billion to $2 billion market cap company, 30%, 35% EBIT margins, if everything works out well. So I think when you look out across the possibilities within the battery metal space, but certainly the graphite space, there's not very many teams out there that are mine builders and mine operators. And so I think that's one of the strong differentiators, is we're really focused on time, on budget delivery of the projects, getting material into the marketplace, developing those commercial relationships, because it takes time. If there was a COMEX or an LME or other market where we could sell spot, it'd be a totally different conversation. But the battery metals, and certainly graphite, it's more opaque, it's more B2B, and there's not a lot of transparency around the pricing. So it's, if you and I sat down and tried to negotiate a contract, our prices could be significantly different than another conversation. So the commercial side of things is really hard for financiers to wrap their brains around. So when you look at funding alternatives out there, and again, this is a lessons learned, there hasn't been a lot of institutional money going into the graphite sector. Lithium, I think, is a different conversation just because of the valuations and the price skyrocketing. Graphite hasn't happened yet, but I think when you look at the alternatives out there, mining's hard. There's a lot of ways to have bad outcomes, and the banks are very cautious about how industrial metals get looked at. So institutions really haven't flowed into the space very much. Banks aren't comfortable lending debt to it because they don't understand the commercial side of it. So what you have in terms of funding alternatives a lot of times is retail. We've got a great partnership with Sprott on a streaming deal. So you've got streaming and royalty companies that are out there doing a fantastic job of providing capital to a certain extent. And our approach has been get into production, get into cash flow, negotiate those contracts, have clients pricing a balance sheet that then I can sit down with any bank in the world, show them basically the financial plan. They can actually see what we're selling at and what where we are in terms of profit. And I can get a very reasonable cost of capital associated with being able to finance these projects. And if I can get 50 or 60% of the financing from debt, get maybe 10%, 15% from a prepayment on an offtake, and the rest is a mix of equity and other funding sources, it makes it a lot more palpable. But it's tough when you're a smaller cap company trying to think about raising 50, 80, 100 or more. I mean, some projects out there are 1.5 billion capex, and it's just hard for a $200 million market cap company to line up 1.5 billion in capex. So there's a lot of constraints on funding for graphite projects. And at the end of the day, when you look out across the space, if you can't be competitive with Asian production, at some point you're going to come under pressure. And so our goals are to take advantage of strategic locations, scalable assets, low capital intensity, first quartile of OPEX so that you can be profitable throughout. We're profitable at 5,000 tons. I'm more profitable at 25,000 tons, and as we scale it, we get more profitable. So our goals are really diversified range of products, selling it into diversified sectors, and really taking advantage of the moment and using our partners and our future clients' balance sheets to help us finance these things.
So you mentioned that price discrepancies right now, and how important is it to sort of, or is it something that's changing, that you see changing, that we're gonna go to a place where it's gonna be a little bit more standard? Or
I think until industry standardizes a little bit, I mean, everybody, from Ford, Tesla, GM, Volkswagen, Toyota, Honda, on and on, they outsource their battery manufacturing to Panasonic, POSCO, LG, SK, on and on. Until they kind of standardize what they're looking for, I think it's really hard. I mean, maybe there's a market for certain concentrates, but some folks want, I want a 12 micron D50, or I want an 18 micron D50. Is there that much difference in the cost? Probably not. There are a couple of companies out there that are trying to set up, let's say, critical metals exchanges. I don't have a lot of insight into how successful they have been. Their volumes haven't been there to date. But again, maybe this next 3 to 5 years that changes and there becomes, a spot market standard gradation sort of products. An ounce of gold is an ounce of gold, and silver, and copper's copper. If I have material, I can sell that in a second at spot price. It's just not quite there yet. So Historically, industrial metals and certainly battery metals, and very much for graphite, it's been B2B. Every contract is negotiated.
Yeah. So in that, who's your target? Like, who are the main, or what are the main targets for the customers for your graphites? Like, what are you looking at right
So
now?
if you think of graphite, there's like two buckets. You have industrial applications, which is refractories, high strength steels, lubricants, brake pads, typical like meat and potato stuff that's growing at GDP, plus or minus every year. That accounts for maybe about half of the demand out there right now. Then the second bucket is really wrapped around the energy transition and EV vehicles and lithium-ion batteries, et cetera. So that's growing at 25% compounded annual growth rate for the next 5 to 7, 10 years, maybe. We'll see kind of how it all stacks up. So for us, China accounts for basically 65%-ish of all the graphite concentrate production in the world. Brazil, depending on whether Mozambique is producing or not, is the second largest historic producing region. So the markets understand Brazilian graphite. They like Brazilian graphite. So for us, we're going to start off selling into the industrial applications, getting material into the marketplace, developing those commercial relationships, establishing those critical elements, because it's all about the commercial side more than it is about anything else. And you have to run it like a gravel operation. It's control cost, control cost, control cost. So I think initially we'll be selling into industrial applications, and then using our platform basically to qualify material for a variety of different value add applications. So we'll outsource upgrading material for a portion of time, and toll mill for a couple years. And then when we bring on the facility in 27 in Alabama or thereabouts, then we'll be processing ourselves. So again, we're looking at alkaline batteries, we're looking at lead acid batteries, we're looking at expandable graphites, fire retardants, micronized purified graphite. There's tons of really interesting markets out there, and you just have to have scale to provide 1 ton, 10 tons, 20 tons, and then you can get your material in there. And I have no doubt that the quality of our material is exceptional. And all clients want to know is you can deliver spec material on time and as promised.
Right.
And if you can do that, you'll have a line of clients around the block, trying to buy material from you.
Yeah. So we're talking about the critical metals landscape, the supply and demand, and there's lots of attention on lithium, copper, and the widening gap between supply and demand.
Yeah.
Is this happening in graphite? Is graphite being overlooked? Is it a looming supply shortage as well? Like, what are your thoughts on that?
Very much. I think if you look at lithium that went from $7,000-8,000 a ton to close to 90, and it's kind of coming off that curve a little bit, and the market caps in the lithium companies. I mean, for a while, if you had lithium in your name, you could raise $100 million, no problem. Just the way it went. So as price went, so did the market valuations and the interest. And I think the same thing will happen really in graphite. This will be the first year where there's really a deficit of supply. It's maybe around 100,000 tons is the projections that I've seen so far of deficit. That'll certainly put price under pressure. If you think about new mines, really that's happening, bringing, let's say, facilities online. You have Tirupati that's bringing 30,000 tons online this year. You have ourselves bringing 5,000 tons, and we'll see what NextSource does. They're supposed to bring maybe 16,000 tons online this year. Outside of that, there's really nobody else that's going to bring new material to the marketplace. Next year, the deficit gets a little bit worse, and really 25, 26 as it falls off a cliff. So in general terms, I think there's going to be real pricing pressure for graphite. I don't pretend to know if my crystal ball is good enough to say it's going to be 2 times, 5 times, 10 times like lithium. But if I have 30, 35% EBIT margins at current pricing and that doubles, it just makes our shareholders happier. So I think in the grand scheme of things, pricing will come under pressure. In terms of supply, You know, the graphite is very abundant. It's not like there's a shortage of carbon in the world, but it's really a question of who can bring material to market at spec on time and negotiate those deals. So again, I feel very blessed and comfortable with where South Star is sitting in terms of bringing production online this year and scaling. We've got a team in place that can build mine and operate mines safely, responsibly, and in partnerships with our stakeholders and communities where we want to operate. We've got two really fantastic jurisdictions. I've been in Brazil really since 2008, full-time. Bahia is a fantastic state to be involved with, and we couldn't be more pleased with our partners where the mine is located. It's been fantastic in Itabela. We've been well received there. We'll hire most of our people from there. The great state of Alabama is a fantastic place to be, and we've had nothing but good support there. And people want jobs. They want, you know, to know that you're going to be operating in a safe, responsible manner in partnership with local communities. Job training. You know, these mines will be long-term mine lives. So, you know, it's a fantastic opportunity at a time when the world's looking for more supply, and it takes 10 years to bring something online. So it's a challenge, and like I said, I think demand is growing exponentially. And if it takes 10 or 12 years on average to bring a mine from concept to fruition, you know, we'll be one of the first movers out there that's bringing good material to market.
Yeah. So when you're speaking to an investor who's, you know, not necessarily familiar with graphite, but looking into it, like why should they look into this, and why should they? Why should it matter?
You know, I think with the energy transition and a decade of non-investment really in commodities and mineral resources in general, there's a real supply chain issue. And for all the horrible things that the pandemic brought, one of the really positive things that it brought to the forefront is having a more robust, balanced supply chain. So there's jurisdictions and companies all over the world that, you know, if for whatever reason one point of production gets you know, lacks material or whatever, and they can't produce, you know, across the board, I think it used to be offshoring, just-in-time production, and the weaknesses associated with that sort of economic system really were shown in the pandemic. So I think it's back to onshoring, having some inventory so there's a little bit of flex in the system, and your CFOs and your controllers, you know, are going to have to make adjustments in how they plan their cash flow and working capital requirements, but that's all part of the game. So I think when you look out across the space, there's going to be a real opportunity for bringing new projects online. You know, a really wise person once told me that you have two options in life. You can either grow it or you can mine it. Those are our two choices. No one really wanted to talk about mining for a decade plus, and so for a lot of companies, it's been the same projects just kind of recirculating, bringing nothing new to the table. So we're really excited about, you know, having assets that are near-term production or in production, and scaling those things. So I think the supply chain is really driving a lot of changes to how people look at where they're going to source materials, and obviously with you know, 20+% compounded annual growth rate and limited supply, I think pricing is going to be under pressure, and folks are looking for alternatives to their current supply chain.
Right. So you have a timeline for when you get to production right now? Are there?
Yeah, December, phase 1 is online.
Okay.
We'll basically have phase 2 online in two years after that, and phase 3 2 years after that. So in Brazil, we'll basically, in 4 or 5 years, we'll be producing 50,000 tons of con. On Bama Star, first production is in 27. Mm-hmm. We'll stand that up with 25,000 tons, and then again move that to 50,000 tons of concentrate. And then the value add plant will initially take material from Brazil, and then as Bama Star comes online, we'll be keeping the concentrate separate and treating it separately. But in general, the idea is 2027 we'll bring first production in Brazil online, and in 7 years we're basically producing 100,000 tons of concentrate and 50 or 60,000 tons of value add material.
That's great. So exciting times ahead for the company, that's for sure.
Yes, ma'am. And for investors, it's a fantastic opportunity. We're basically trading at $16 million market cap company, and we've got $17 million sitting in the bank, and we'll be in cash flow next year. So again, I think it's a Warren Buffett special. Insiders are behind it. We're well aligned with shareholders, and it's just a fantastic buying opportunity for folks that are trying to get into the battery metal space. And I see nothing but much higher share prices in the future.
Great. Well, thanks for sharing your company's update here, Richard, and we'll looking forward to see you again next time.
Nice to see you. Thanks for having me.
Thank you. And thank you for watching. Join us again next time for another engaging conversation on CEO Insights.